Hi everyone, this is Knowledge Topper, and in this particular video we'll understand our second type of marketable securities, which is marketable equity securities. We already covered our first type, which is marketable debt securities, in our recent previous video, and I already made a detailed video on marketable securities in which we already clear our concept related to marketable securities. So if you want to watch that, you can watch it by clicking the thumbnail at the end of this video. But before moving towards our today's topic, if you didn't subscribe our channel Knowledge Topper yet, please do subscribe our channel Knowledge Topper, as well as like our Facebook page, and do join our Facebook group as well, where you find a lot of good material related to these topics as well as from other courses as well. So let's get into this video. So as written on your screen, marketable equity securities are equities that are issued by a public company, and it is held by an investor. If we talk about the examples of two marketable equity securities, they are basically common stock and preferred shares. If we basically talk about marketable equity securities, you must understand that these marketable equity securities are basically generally you can say it is considered short-term investments, and listed as current or non-current assets as well. Now you may ask, like, why they are recorded as non-current assets having a maturity of less than 1 year. Remember that it is depend on the intended purpose, okay, intended purpose of the investor. However, if the securities basically are purchased as a means to acquire or control the issuing company, so they would be reported as long-term investments, because the core option to invest in such marketable equity securities cannot be to control or acquire. Or so basically, if we eliminate that particular means, we will left with high liquidity and low risk investment. So now we talk about the examples. Here is an example for you guys that I prepare. Suppose that there is a company LMN, and is a successful car manufacturer that plans on expanding into boat manufacturing. In order to raise capital for this new venture, they plan on launching an initial public offering, which we already know, and I already made a detailed video on an initial public offering as well, IPOs. So basically they plan on launching an IPO, making a portion of the equity available for sale. Now there's another company who is company QRS, and it has extra cash, and it believes that company LMN shares will increase in value after the IPO. So what they did is basically company QRS buys 1,000 shares intending to generate profit, and after 1 month time, the share price, let's say we assume that the share price increased by 25%. So QRS company sells their shares, and since the shares were held for less than 1 year, means the duration is for held is 1 month only. So since the shares were held for less than 1 year, they are considered as marketable equity securities. So this is the best example for you guys, and a very easy one as well. Hope you understand about marketable equity securities. If you like this video, thumbs up, do subscribe to our channel Knowledge Topper, as well as like our Facebook page, and do join our Facebook group as well, where you find a lot of good material related to these topics as well as from other courses as well. So this is the video for all of you guys. Thank you so much everyone. It's time to say bye-bye.